Good morning, everyone. Hopefully, you guys had a great Christmas and really got to spend time with the family on the holidays. I just got back from California, but I want to give you guys a quick update on everything for the last Market Monday for 2025. So, before I get right into it, I'm going to do a quick dad joke. So, my assistant actually got me this gift that I came back to the office for 365 dad jokes. So, I'll have plenty of dad jokes for once a week for the next 6 years, I think. Six, seven, I don't know. Yeah, 6, 7 years probably. So I'll have the ability to give you guys a lot of dad jokes for the rest for a while. So to start off, here's one I got from the box itself. Why did Mickey Mouse take a trip into space? Why did Mickey Mouse take a trip into space? He wanted to find Pluto. Get it? Pew pew. All right. Oh, there's another one on the back. I used to hate facial hair. Then it grew on me. Nice. So there's a double whammy for you guys there. So let's get right into it. So what's happened since last week? I didn't really do a market Monday last week just because there was a whole lot going on. But I want to give you guys a quick update on everything that's happened, even through last week, and just giving you an idea of what inflation has done, what pretty much how we ended in December, but also give a notification that I actually posted my blog and video about the year-end report for December for the entire year on how everything went. And I'll be posting the January forecast when I'm ready for that, sometime in January. So I'll probably make that a kind of a Zoom event, and then I'll obviously record that. That way you guys can watch it at a later time. But I will be doing some kind of a Zoom event class or something like that in regards to that information. So let's get right into it. So generally over the last 2 weeks, the only really big news that we got, the two biggest ones, were the unemployment rate and inflation for consumer price index. Now, what was exciting about the unemployment rate is that it's kind of weird to say exciting because it is the unemployment rate. But what's exciting about the unemployment rate was that it went up from 4.4 to 4.6. Oh, sorry, 4.6, not 4.46. 4.4 to 4.6. So it went up by 0.2%. But I want to be very clear about it. It's also a rounding situation. So the actual number was 4.44, which got rounded down to 4.4. Right, it went from 4.3 to 4.4. So really 4.44, which is right on the cusp of 4.45, which would have been rounded up to 4.5. So that's how close it was in November, for November. And that was a report from September to October, okay? Now, for the unemployment rate that we got in December was a combined report between October and November that normally gets released in December. So we got those combined reports, and that showed that since beginning of October to the end of November, the unemployment rate went from 4.44 to 4.56, which was rounded up to 4.6. Okay. Either way, it's a big jump, right? Which was weird because the mortgage rates didn't actually respond as much as we had thought. You know, mortgage rates responded really well in November when we got the September report because it went from 4.3 to 4.4. And then the one in September and the one in August and even the one in July, mortgage rates moved a lot, almost by 0.25% lower because the unemployment rate went up by 0.1%. We didn't get the same response, which was weird because it went up by 0.2%, right? So that was the one thing that was kind of weird. But 2 days later, what actually happened was the inflation report came in. So inflation report came in and it was went from 3.0 to 2.7, which is a really good sign. Mortgage rates responded more positively because of that. Now, the other thing that kind of helped mortgage rates get a little bit lower in the first 2 weeks of December was the Fed rate. So if you guys have been following me and been watching how the trend of Fed rates and how it impacts mortgage rates, I hope you guys now see that, you know, it's really hard to follow the Fed rate and seeing what mortgage rates will do, right? Because it can be all over the place. And December is an example in context of the other five moves with the Fed rate. So if we were to kind of take a look at this chart now, I mean, mortgage rates have improved a decent amount, and I'm really happy about that. But I want to kind of show you guys that, you know, back in the end of September, we saw that when the Fed rate was lowered by 25 basis points or 0.25%, mortgage rates actually went up. And then the same thing happened in at the end of October where they lowered it again to 3.875. Mortgage rates still went up. But now, this time, the Fed rate was lowered again to 3.625, and actually mortgage rates improved. And then the unemployment rate did make small improvements, not as much as we had hoped. And then we had the inflation report, which came in, which is right around here, is when we got the big moves. So we had all these three things that kind of just worked in our favor. They didn't move as much as we'd hope, but they did move it to a lower standard. Now, we're for VA rates specifically, we're probably, we're back where we were in September of 2024, which is a really good sign. We're seeing rates improve in the right direction. Mortgage rates are essentially a lot better. We hope that these trends continue into 2026. And honestly, I really hope that rates don't really get any lower than 4.75. As much as we would like rates to get in that range, the tough thing is what I've seen in my experience in the last, eight years of this mortgage industry is that, with rates being too low, it provides too many people the opportunity to buy a house who should buy a house. And I've talked about this too, is that home buying is a responsibility. A lot of people think it's going to solve a lot of their problems. It's not that I'm not an advocate for home buying. I'm a huge advocate for home buying, but I want to make sure I'm advocating for when it's right. So I go into a lot more detail in my house hacker program, but this is essentially, we want a nice, medium between people who can be responsible with home ownership and people who just buying a home that they think it's going to solve all their problems, when it actually kind of does the opposite. It actually creates more problems and more responsibilities than it does renting. So it's much like, being having a friend that has a dog versus having your own dog. That's the difference there. So, or being an uncle or an aunt, like that's you have the benefits of hanging out with, your kids that are your blood, but you don't actually have to take care of them. So that's kind of like the difference between home ownership and renting. So getting off my soapbox. So what are we looking forward at this point? There's really not much else to look forward at this point. I mean, we have the personal consumption expenditures report, but for the most part, this is with the new year being in a couple days. There's really not much else to do. There's really not much else to report on. We just hope that when we get the unemployment rate for January 9th, we may see the trend going in another direction where mortgage rates could improve a little bit more. Now, one of the things I want to bring up is that one of the reports that did come out was GDP. GDP is gross domestic product, which means it's basically how many goods are selling. That did go up to 4.3 when it was expected to be at 3.3. So that's kind of a big deal, but that's also from the holidays, right? That's the other piece you have to consider. And a lot of people put their stuff on credit, especially with the government shutdown. But mostly the reason why this number went up so much is because it was driven by electric vehicles, because the tax credit ends this year. So a lot of people started buying electric vehicles to get the tax credit, which I think is kind of silly, to be honest. But there were no major changes in the continuing unemployment claims and initial unemployment claims because a lot of people that got laid off between October and November and furloughed and all that stuff, and through the holidays and a lot of them probably didn't file for unemployment benefits yet, is because they went into gig work. Gig work is like DoorDash, Uber, things like that. So a lot of them may have started going into that type of work instead of filing for unemployment. So you might see it, or it's the holidays. They decided to delay those benefits until after the holidays. So that could be something that could happen on the January 9th report, is that we could see a way bigger move in the unemployment rate when people start filing for unemployment benefits, or even into February. So that's something to consider. And then the other thing to consider, just right on the horizon, a month from now, is another potential government shutdown. We might be seeing another government shutdown. So please, if you are a federal worker or you get paid by the government, however, or you were affected by this last government shutdown, I would say just prepare for another government shutdown. Just prepare for it, right? Save all your money. I try to get the information out as soon as I could, so please do that. And then again, I'll bring out the post about the 2026 forecast. But last thing I want to say is like the December year-end basically report is out. I put it on my website as a blog post and also includes a video. So feel free to check that out if you want to kind of get a good scope of how everything turned out at the end of the year, how mortgage rates moved, what we're expecting. Again, I will make a post about when we're going to make the 2026 forecast, and I want to make a live event on that. So if you have any questions, let me know. I'd be happy to help. Otherwise, nuke out.